Following recent tensions between both Palestine and Israel, I thought that perhaps it would be a good idea for us to actually have a look at the technical analysis of Brent crude oil or Brent oil. And as you guys know, oil has an effect on all the indices or all the instruments rather that we trade, whether you trade Forex, whether you trade commodities, whether you trade crypto and so forth. And without wasting any further time, guys, let's get straight into the actual technical analysis. And at this point in time, we find ourselves on the weekly chart of Brent futures. And on this chart, we can see that price at this point in time has given us two very important structures. The first one is what seems to be an inverted head and shoulders pattern, with this side being the left shoulder, this being the head, and this area over here being the right shoulder, and it has a neckline at that point. Some of you may say that actually the market has given us what is a W structure, which has a neckline at that point, and the inverted head and shoulders pattern as well as the W structure or double bottom are exactly the same pattern really. The only difference is the inverted head and shoulders pattern has an extra leg, as you guys can see, right? But it's really, or rather they really are the same pattern. Anyway, once we have these type of patterns, you guys know that we want to see price actually, if I can just draw this properly, price closing sufficiently above the neckline and then coming back to the neckline to give it a test, and at that point you know is where we look for those potential buy opportunities, especially if, as I always say, guys, the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. So we can see the price closed above the neckline, came back to the neckline to give it a test, and at this point is where we should look for those potential buy opportunities. I'm just going to utilize the Fibonacci retracement tool just to see if we have any key numbers that align with the neckline or that very strong level of support. And there we go, and we can see, guys, that the neckline, which is over here, of this W pattern or this inverted head and shoulders pattern aligns with the 50% Fibonacci retracement level, which is confluencing as far as looking for potential buy opportunities goes at that level. And another thing that I also want to bring to your attention is that some of you may say that price is actually closed below the neckline. That is not correct, and that is because necklines are not lines like I have here. Necklines are areas. So in other words, we could say, for example, that this whole area over here, right, is the neckline of this W structure or this inverted head and shoulders pattern, right? So guys, at this point in time, I believe that we should look for potential buy opportunities at this point, and that is because, as I've said, we have the formation of a double bottom or W structure. We have price closing sufficiently above the neckline, and then it coming back to the neckline again to give it a test. And we also have the neckline aligning with the 50% Fibonacci retracement level, right? So that is confluencing as far as looking for potential buy opportunities goes at that level. And in my very humble opinion, because this structure started around this level, right, ideally we want to see price actually close at that level in line with where it had started to complete that structure. What else do we see, guys, on the weekly chart of Brent futures? At this point I don't see much. Let's head down to the daily chart and see what's happening down there. And here we are on the daily chart, and just to recap, guys, remember on the weekly chart we spoke about how price had given us this inverted head and shoulders pattern, or we could say also that it is a W formation, and they both have a neckline at that point. We saw price at this point breaking to the upside, coming back to the neckline to give it a test, and we said at this point we should be looking for potential buy opportunities. But let's zoom in and see what else is happening in regards to the daily chart. On the daily chart, we can see also that the market has given us a gap at that point, and what gaps are areas of liquidity, and what this tells us is that we have a lot of liquidity stuck here, and it is quite possible that before we actually see price continue to move further up, we may actually see it come further down to close the gap and then only move further up. And that is because, guys, gaps are liquidity, and liquidity represents money that needs to be triggered by the market. Another thing that I also want to point out that is very much important is the fact that we have this candlestick over here, and it is a bearish candlestick with a small body and quite a long lower wick. And at the bottom where that wick ends, we have a lot of liquidity there. That liquidity is actually money, just like we have money stuck at that gap, or rather in that gap. And so there is plenty of scope for the market to actually move further down, to grab all of those liquidity points, and then only potentially move further up. Another thing that I also want to bring to your attention, guys, is that as much as I'm saying that we should look for potential buy opportunities, just also note that if you were to look at this area over here, the market had also given us what seems to be another W formation, right? I hope you guys can see that. And you guys know that whenever we have these W structures, what normally happens is that a lot of traders and investors buy on the second leg and they place their stop losses just below. So there's a lot of money stuck here where we have that gap, as well as where we have the candlestick, in addition to just around this area over here. And what this means is that as much as I'm saying that we should look for buy opportunities, it is quite possible that the market may go down to collect all of these liquidity areas and then only move further up, right? But just to go back to the weekly chart, my bias, guys, is for price to actually continue to move further up. And also another thing I want to bring to your attention is that because the market had given us a double top here, remember, just like with that W structure over here where a lot of traders and investors bought on the second leg, with M structures, traders and investors sell on the second leg as well, and they place their stop losses just above. So there is a lot of money stuck here in the form of stop losses, and I believe that in the future we will see price move further up to grab some of those liquidity points, as stop losses are money, and that money needs to be triggered by the market at one point or another.